All right, today we're stepping onto a brutal Wall Street battlefield to unpack the high-stakes war over Bitcoin. And let me tell you, this isn't just about some new asset. This is a fundamental clash of ideologies, with two of finance's biggest personalities staring each other down, and billions of dollars hanging in the balance. And, every war has its generals. On one side, you've got Jamie Dimon. He's the undisputed king of Wall Street, the CEO of the financial behemoth JPMorgan. And on the other side, Michael Saylor, the CEO of MicroStrategy, who has become the ultimate Bitcoin maximalist. And by maximalist, I mean he believes Bitcoin is the only digital asset that truly matters, and he's staked his entire company on it. So you have two incredibly powerful guys with two completely opposite visions for the future of money. Okay, so the stage is set. This isn't just some squabble. This is a fight for the future of finance itself, and Wall Street is the battleground. So let's start with the guy representing the old guard, the established power, Jamie Dimon.
Yeah, Jamie Dimon has never been one to mince words. For years, he was on a very public crusade against Bitcoin, using the strongest language you can imagine. He didn't just say he was skeptical, no. He called it useless, dangerous, a straight-up scam. He was basically positioning himself and JPMorgan as the voice of reason against what he saw as a totally reckless fad.
But, and this is a huge but, that was just what he was saying out loud. What was happening behind the scenes at JPMorgan told a completely different story.
So get this, while Dimon is out there on TV calling Bitcoin worthless, his company, JPMorgan, was privately and quietly building one of the largest crypto trading desks on the entire planet. It's a classic Wall Street move, right? Trash it in public, manage your image, but make absolutely sure you don't get left behind if this thing actually takes off. So you've got this complex, two-faced strategy from JPMorgan, public doubt, private investment. Now let's look at the other side of this conflict, Michael Saylor, whose approach was the polar opposite. We're talking radical transparency and just total unwavering conviction. And this right here, this shows you just how deep Saylor's conviction really was. He didn't just, dip his company's toes in the water. He went all in. He took on billions of dollars in debt for the sole purpose of buying more Bitcoin. He staked the entire future of MicroStrategy on this one single asset and just kept doubling down, buying more and more. It was an incredibly audacious move.
So you have these two massive opposing forces pushing against each other in the market. You just know something's got to break. And boy, did it ever. This led to an event that would change the entire game, the Great Bitcoin Short Squeeze. Okay, so what is a short squeeze for anyone who might not know? It's a truly brutal market event. Basically, traders bet that an asset's price will go down. They borrow it, sell it, and hope to buy it back cheaper later. But if the price shoots up instead, they're trapped. They're forced to buy back at a higher price to stop their losses from getting even worse, and all that panicked buying just pours gasoline on the fire, sending the price even higher. It is a vicious, vicious cycle for anyone caught on the wrong side. And boom, here's exactly how the trap was sprung. Step one, you had an army of short sellers, probably feeling pretty confident thanks to guys like Dimon, placing huge bets that Bitcoin was about to crash. But then, step two, the unexpected happens. New Bitcoin ETFs get approved, and suddenly it's super easy for big institutions to jump in. This creates an absolute tidal wave of demand, which leads to step three. Wall Street firms are scrambling to find enough Bitcoin to meet this demand. And the result? Step four, the price just rips upward, and billions of dollars in those short positions, poof, they were liquidated, just completely wiped out. That explosion didn't just create ripples, it created a financial tsunami. And in the aftermath, we see a stark tale of two completely different fortunes for our two generals. For Jamie Dimon, this was, well, a total nightmare. Now, you can't blame him directly, but his constant public attacks on Bitcoin definitely created an atmosphere where a lot of hedge funds and clients felt confident betting against it. And when those bets got absolutely torched in private, it seriously undermined his public credibility. But on the flip side, for Michael Saylor, this was the I told you so moment of a lifetime, the ultimate validation. His massive, frankly high-risk bet paid off on a scale that almost nobody thought was possible. MicroStrategy's portfolio didn't just grow, it absolutely skyrocketed. And this chart right here, man, this just puts it all into perspective. Look at that. You can see the value of MicroStrategy's Bitcoin before the squeeze, which was already a lot of money. But then look at the after. The value just multiplied, again and again.
this isn't just a nice little profit. It's a fundamental revaluation of his entire company, all because of one single high-conviction bet. It's just a stunning visualization of that market move. Let's be crystal clear about this. This wasn't just a good trade. This went down as one of the single most profitable, legendary bets in modern financial history. People are going to be studying this one for years. But here's the key takeaway. A short squeeze, as dramatic as it is, that's just one epic battle. The larger war, the one for the future of finance itself, oh, it is far from over. Because when you strip everything else away, this whole conflict boils down to two very different, very powerful ideas. You have JPMorgan and the traditional system it represents fighting for control. Control over assets, over transactions, over the flow of money. And then you have Michael Saylor and the movement he champions, fighting for freedom, for a decentralized system that no single bank or institution can control. And then there's Bitcoin itself, right? Just sitting in the middle of this tug of war. It's not loyal to Dimon or Saylor. It just keeps on running, following its own code, completely indifferent to Wall Street's old rules and expectations. It's this wild, disruptive force that, in the end, neither side can truly tame. So it all leaves us with this massive question, doesn't it? When you have institutional control clashing head-on with disruptive, decentralized innovation, who really wins in the end? Is it the old guard trying to co-opt it, the visionaries betting everything on it, or is it the disruptive technology itself? The war for the future of finance is still very much being decided.